So you're thinking about the Israeli property market in 2026? Well, you picked one heck of a time to jump in. We're seeing some big changes from the Bank of Israel, the whole economy is shifting, and getting a mortgage can feel, well, pretty complicated. But don't you worry. We're going to break it all down and show you how to turn all that complexity into a real advantage.
I mean, you see the headlines, right? Bank of Israel cuts rates, inflation is easing. It's a lot. It is enough to make anyone's head spin. You're not just trying to buy a home. It feels like you're trying to navigate this giant economic maze. And look, when it's your money and your future on the line, that kind of uncertainty can be really stressful.
But here's the thing, and this is the good news. All of this change, the new regulations, the interest rates moving around, it's actually creating a unique window of opportunity. Seriously, if you know what you're doing, this is your chance to lock in a better deal, save a ton of money, and make a really smart long-term investment. And that's exactly what we're going to give you. The clear, simple knowledge to do just that. Okay, let's dive in.
We're going to start by cracking the code on all that mortgage jargon. Then, we'll look at how the rules change depending on who you are. We'll get into the brand new regulations for 2026, and finally, we'll lay out some smart next steps for you. Let's get to it.
Okay, first things first. You can't win the game if you don't speak the language. And yeah, banks love their jargon, but trust me, the core ideas are actually pretty simple once someone just breaks them down for you. So let's crack this code.
Pretty much everything in the Israeli mortgage world revolves around this one thing, the prime rate. All it is the main interest rate set by the Bank of Israel, plus a fixed 1.5% that the banks add on top. So, when you hear that the Bank of Israel is cutting rates, which is what we expect to see in 2026, that prime rate goes down, and so does the payment on your variable rate mortgage. It's that direct.
Now, here's something you got to understand. A mortgage in Israel isn't just one big loan. It's usually a mix. They call it a tamhil, of different loan types or tracks. You've got three main flavors. There's one tied to that prime rate we just talked about, another that's fixed and predictable, and a third that's linked to inflation. A smart mix for 2026 might be putting a chunk into prime track to catch those falling rates, and then balancing the rest with a stable fixed-rate loan. It's all about building a mix that fits your appetite for risk.
And this right here is the fundamental choice you're going to have to make. With a prime link track, your payment moves. When the Bank of Israel cuts rates, you save money. Awesome, right? But if rates go up later, so does your payment. A fixed rate track is the exact opposite. It's locked in solid. You get total predictability. So it really boils down to this. Do you want flexibility or do you want security?
And this is absolutely crucial. The Bank of Israel knows that floating rates can be risky. So to protect borrowers, they made a rule. No more than 1/3 of your total mortgage can be in that variable prime-linked track. The strategy behind this is huge. It means even if you wanted to bet everything on rates falling in 2026, you can't. The rule forces you to diversify, to build a safer, more balanced mortgage. Think of it as a built-in safety net.
Okay, now let's talk about how these rules aren't one size fits all. The amount you can borrow really depends on your residency status in Israel. For the banks, this is a make or break factor.
Before we jump into the numbers, you need to know this term, loan to value, or LTV. It's really simple. If a place costs 1,000,000 shekels and the bank offers you a 75% LTV, they're lending you 750,000 shekels. The other 250,000, that's your down payment. So a higher LTV means you need less cash up front.
And this table just lays it out, plain and simple. If you're buying your first home, Israeli citizens and new immigrants, Olim Chadashim, can borrow up to 75% of the property's value. But if you're a foreign resident, that maximum LTV drops to just 50%. Let me put that another way. A foreign buyer needs to bring double the down payment that an Israeli citizen does for the exact same apartment.
Oh, and one more thing. You might actually qualify for a government-backed loan. It's called Zakaut. These are amazing because the interest rate is capped, usually around 3%, and get this, there are 0 fees if you want to pay it off early. It is absolutely worth checking your eligibility for this on the Ministry of Housing's website. All right, let's get into what's new and, frankly, pretty exciting for 2026. The Bank of Israel just pushed through a major reform. The whole point is to make the banks compete more for your business and, most importantly, make the entire process way clearer for you. And hey, don't just take it from me. The Bank of Israel itself said that the whole goal of this new standardized approval form is to empower you. It's designed to cut through the confusion so you can actually compare offers from different banks, apples to apples. This is a game changer, especially if you're thinking about refinancing to take advantage of these lower rates. So how's it work? Simple. The form has 3 parts. Part 1 is just your basic info. Part 2 is where the magic happens. Banks now have to give you up to 3 standardized mortgage mixes, or baskets. This means you can take the offer from Bank Leumi and compare it directly to the offer from Bank Hapopolium. Then Part 3 gives you the bottom line, the total interest you'll pay over the life of the loan, your very first payment, and even a forecast of what your highest ever payment might be. No more nasty surprises.
And in another small but sweet victory for borrowers, the government capped one of those annoying little bank fees. The file opening fee? It used to be all over the place. Now, by law, it can't be more than 360 shekels. Look, it's not life-changing money, but it's one more step towards a process that's just a little bit fairer.
So, we've covered a lot. We've talked about the language of loans, the rules for different buyers, and all the latest reforms. We've gone from the big picture of interest rates all the way down to a 36 shekel fee. The big question now is, what do you do with all this information? How do you put it into action?
Here it is, your checklist for 2026. If you take away only 4 things, make it these. 1. Know the difference between the mortgage tracks, prime, fixed, and CPI-linked. 2. Always remember that 1/3 limit on the variable rate loan. It's your safety net. 3. Know your max LTV cold. Is it 75% or 50%? And 4. When you go to the banks, you demand that new standardized offer form. It's your right, and it is your single best tool for getting a great deal.
Listen, the Israeli mortgage market might feel like a maze, but it's not nearly so scary once you have a map. And now you do. You have the key knowledge you need to ask the right questions, to understand the answers you get back, and to navigate your own path to buying a home with real confidence. So the only question left is, where are you going to start?